Gaurav Bissa, our technical guest, to get a view on the market. Now, Gaurav, we are seeing the third consecutive day of fall when it comes to Nifty. Where are you seeing some support for Nifty?
Good afternoon to you, your viewers, and your team. See, when we talk about the third consecutive day or last 4 5 days, we have seen some pressure. Majority of times we have seen bounce also being followed. Yesterday, if you see, we had 100 points bounce on low level of the day, and before that, day before, we had seen 1%, 1.2% fall in US markets. Yesterday also, we witnessed almost a percent fall in US markets. We are half a percent down, so we are still outperforming. We have still not seen pressure. To answer your question, 19,475, 480 on the spot side is the immediate support. Once that is taken out, it can slip towards 19,300. And once that is taken out, even 19,000 would be on side. So for now, we have advised the clients that one needs to be cautious here. There can be a bounce back. One cannot rule out that, but it will be more of a bounce back. But this current leg of downside, I think it will continue towards 19,000, 19,200.
Out on those levels for the Nifty. But, when you talk about PSU Banks, Gaurav, how is that looking to you? After that rally and run-up that we've seen, PSU Banks are doing nothing exciting in the recent time. So what is the view on Nifty PSU Banks and anything exciting that you're finding in the PSU Bank sector then?
See, we have been very, very aggressive on PSUs, also on PSU banks, and we have advised a lot of these stocks to our clients, except for, say, Bank of Baroda, SBI. We have an Indian bank. We have been majorly participating in rally of in the last few months. And in my opinion, we may see some amount of correction, some amount of consolidation, but nothing beyond that. I don't see a major crash sort of happening. Many of these small cap PSU banks, like of Central Bank and others, Bank of India, they have reversed a 10-year, 12-year downtrend. So it will not fizzle out that easily. Yes, there can be some amount of profit booking. We have seen a very sharp uptick sort of coming in, but beyond that, I don't see much of a downfall. And they are on the way of further 2 year, 3 year upside for the minimum. As of now, we are not advising. Probably if somebody wants to take a trade and about 380, 382, Canada Bank can be bought keeping a stop loss at 370 playing for 400. Let it come out the consolidation. Let it see a breakout. That will become interesting. But for now, I think one should be a little bit cautious on the trading side for PSU banks because they have run up so much. But for long term, I have absolutely no issues in the upside.
Well, Gaurav, do you track the holding companies like Bombay Burma, Dhunseri Investments, and Sumit Securities? All of them are buzzing in trade around 15 to 20%. In fact, Bombay Burma has locked in an upper circuit of 20%.
Well, I do track Bombay Burma because it's a trading name, it's a trader's favorite name. It had a small rounding bottom. There was a breakout. It made a breakout. It tested at 1150, which is where we had recommended. But we are out at much lower levels. So it's at 1420, 1430. We were out at 10-15% gain. So in my opinion, if somebody has already bought, one can keep holding. There's a swing high breakout that we're seeing at this point in time. And the next logical hurdle is placed at 1540, 1550. And a close above that will be even more lucrative and can go higher. I would not recommend buying fresh from the current levels because the risk score would not be that favorable. But if somebody has already, bought it, then I think one can keep holding it.
Gaurav, if we could pull up the charts for both IGL as well as MGL, and what is the indication you're getting in from IGL, MGL? How are you looking at in terms of the stock move on the technical level now?
See, among the three CGD stocks, MGL, IGL, and Gujarat Gas, MGL was the strongest one. It has been the most stable one. It has been the most rewarding one as such. But if you look at the long-term charts, 1180 is a very strong hurdle. And in last 5 years, this is the third time we are reversing from this particular zone. In the past two occasions, we have seen strong correction sort of happening. While the stock is still in the uptrend, MGL, I would recommend adding at lower levels. There is support, a decent support, so to speak, of at 970. So any declines towards 980, 990 can be used as buying opportunity. At the current juncture, if somebody is already bought, it's time to book profits because the structure is not that weak and strong. There's some divergences on long-term charts as well. As far as IGL is concerned, we have seen a very strong move. It has been trading in a rising channel, and from there we have seen the stock reversing from the upper band of the channel. It is exactly at the channel support area. A close below 410 can push it towards levels of 390, 395. So today is going to be a critical area. If it's closing above 416, 417, then a bounce towards 440 can be seen. But if that is not the case, a close below 410 will keep rendering the stock towards low levels.
Well, Gaurav, before we let you go, what would be your top picks for the day?
My first recommendation would be a buy call on MFSL. See, both the calls that I'll be sharing today have a similar structure. It's more of a breakout retest. So in such scenario where your markets are falling down, your pressure is incremental. The breakouts may fail, but breakout retests generally do not fail, and they have a much higher degree of cushioning as against your normal breakouts or reversals. So MFSL target of 970, keeping stop loss of 890. Second would be buy on HDFC Life, where we have seen a channel breakout. It is now retesting the breakout areas above the previous swing low. One can keep a stop loss of 615 and play for target of 670.
Okay, Gaurav, thank you so much for joining with us this afternoon on Markets Unknown, giving us an understanding on the markets and talking about individual stocks and what are your picks as well. Thank you so much for that, Gaurav. But let's move on.